All right, everyone, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up. Don't forget to like, comment, and subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So, really a wild week in the markets. It was a shortened trading week, obviously with New Year's, and we have another shortened trading week next week. Very strange. I've never seen them do this before, but I guess we're closed next Thursday for observing Jimmy Carter, I guess. So, and I don't know why they didn't just make it on a Friday, give us a 3-day weekend, but nonetheless, shortened week to start the year, shortened week last week, obviously for holidays. And then we have a full week and then MLK week for OPEX. So, wacky schedule here, but we're going to get through it here. Markets, very interesting. So we had a pretty good gap down on Monday after the little dip into the 27th there, and kind of sideways to lower into Tuesday, and then Thursday we did test the FOMC low, and again we've been noting this head and shoulder top here. I've been kind of on the side here that I just don't like it because it's on the SPY, and it's very easy to see, right? A lot of retail, it's a pattern retail like, and they tend to fail a lot for this reason. They're just very easy to see. A lot of people like to front run them, and we had a nice bounce here on Friday, up 1.25% on the spiders. Bottom line, they're defending the FOMC low, and maybe a little bit of shorts trapped with that Thursday price action. But bears still, right now, to be fair, they're in control. Let me go to the SPX here. So they're in control on a short-term basis as long as we're below, I'm just going to say 6K. And I said this last week as well. We did obviously dip down, but I do think they want to go back and back test that. You can see this little flag here. I'm just getting down to the short-term time frames here, but you can see if I extend that out, that's kind of where we went up to, and then we backed off. And next week, if we inch up in there, those two levels are going to coincide. If I flip onto like a 4-hour or a hourly time frame, you can see it very clearly right in that 6K area. Very big whole round number. A lot of options dealers have a lot of exposure there, and I think we'll get tested. So bears, it's up to them to defend that area right now. There's a little bit of interest at 59.50 as well, and you can see we essentially closed right on that 50 moving average, which is just below that here to end the week. So bulls coming back, playing some defense on Friday. Next week will be interesting. We have jobs, so JOLTS, ADP, and then of course non-farm payroll. We haven't really had any economic data since the FOMC, so it's been 2 weeks of just kind of free mode here with the markets. A lot of stuff going on in January though. A lot of end of year stuff, end of year wrap up. A lot of funds wind things down, and now they're starting to come back here. My guess is the big boys will come back on Monday. So that'll be the 6th. I think that, maybe a lot of them with this extended, all these holidays may have taken off this week, and I think they'll start to come back earlier next week as we see volume volume trends pick up. But bottom line, it's up to the bears here to defend 6,000 if they can't. I do think we'll make new highs. And again, for the bulls here on the weekly, all we did is test the weekly 20 moving average, as you can see. So bulls still holding up and in control, but definitely a wobbly start to the year. We still have not taken out that big breakdown, FOMC breakdown high, but we'll see what happens here next week. Jobs will be a catalyst. There's going to be a lot of hedges there, which sometimes can provide upside if there's nothing terrible that happens. But we'll see what happens here. And again, definitely a wild start to the year so far. As we're only 3, 4, 5% off the all-time high, but it feels like we're down, 10, 20% here with that kind of whimper. We didn't really get the Santa rally. We got the first half of it, but not the back half. And we'll see if bulls are able to come up here, but 6,000 is the big level. Let's take a look here at the Qs. Again, rallying and holding the 50 moving average by the end of the week. If we take a look at the weekly, not even really challenging that 20-week moving average. So bulls holding up in the tech land. Semiconductors, usually I cover these a little bit after here, but you can see they led the last 2 days, and you guys always know I look for the semiconductors as a leading indicator, and they've inched up here, and we didn't go back down to that lower trend line of this channel. I know that there's two trend lines here. One of them is like a little bit shorter, or lower rather, and we've kind of traded through it a lot, but price is respecting it, and it's respecting both. But notice how we did not need to come back down after hitting the top end. So starting to see a little bit of momentum here in the semiconductor space, NVIDIA above that key 140 level. I think 150 is next. I'm not exactly bullish first half of the year chips, but right now they're acting well, and I do think they'll try to challenge the highs here. So tech's still hanging in there. Russell 2000, nothing's changed. Still looking at that 225 handle. If we can break through that, this should shoot to 230, maybe 235 pretty quickly. Also, during this little dip here, it's the last 4 days, we were down outside of today, but the Russell actually up. So look for those divergences. If small caps are outperforming, that's usually a good sign. Semiconductors outperforming, usually a good sign. I think that told us to look for this rally here Friday, and we'll see if bulls can follow through on Monday. Anyway, Dow here, again, kind of sideways. We did rally today, but still inside of this range here. Not the greatest chart, not the most terrible chart. If you look at the Dow futures, here's really what I'm looking at. You can see it a little bit more clearly. I like this trend line going back to the 2023 lows, and we essentially back tested the previous all-time high. To me, I mean, that's good enough. Like, that's essentially a test. But we'll see if it follows through. If it does, we'll just move this trend line up a little bit and kind of adjust our levels. My bias is this can go back and test at least 44K, and then we'll kind of go from there. That should coincide with 6,000 on SPX. So we covered semis. Let's quick jump to IGV. So again, similar kind of head and shoulder look. They spiked the low a couple of times, closed below yesterday, and we rallied up. So shorts maybe getting a little trigger happy, we'll call it, last 2 days. Unable to follow through, and we'll see if we can push back up. We got a pivot here at 104.50 and 106. So IGV trying to hang in there. Transports were surprisingly strong today, kind of soft this week though. Again, a little bit of a bear flag here type look, but we got a lot of chop in here. I think transports are okay right now. As long as the market holds up, I think they'll hold up. Would have really loved it if they just went down and flushed to that trend line, but near term, I think we can try to challenge 16.2 and then maybe 16.6. But transports have been a little soft, and that's definitely noteworthy. So definitely on the weaker side here. And what we're going to watch for, by the way, if you haven't checked it out, we did our 2024 review and 2025 preview. We talked about kind of the yield curves here, and we'll talk about them right now. There's a 2-year. This is held up okay. It has not made new highs. We have a lower high here. But look at the long end. Higher high on 10s and 30s. So if we do start to come in with that 2-year, we start to see a slowdown. I don't think it's really going to bring that long end down. And this is the first time ever, I mentioned this, never has there been a time where the 10-year rallied 100 basis points after a Fed cut. And that was only, 2 months? So I'm thinking stagflation. That's the risk here for the markets in 2025, if you ask me. Is this going to translate to stocks right now? Remains to be seen. We got to look at that 6,000 level. Bears show up there, then they're making a statement. But if not, then it may get postponed. A couple of things we talked about too. I'll jump in before we get to the other stuff. We talked about January effect. Solar. Take a look at TAN. Up nicely the last 2 days here. Sold off at the end of the year. A lot of this, I think, is tax loss selling in these certain sectors here that have just been, slammed. They do tend to get bids. TAN up nicely the last couple of days. FSLR, that has been up nicely. Look at some of these really beaten down stocks. SEDG, solar company, 13 to 15. One I have, again, for a squeeze play, $6 to basically $7. It's a pretty good gain here in just 2 days. Again, it's very early. We're only 2 days into the year, but we're starting to see that January effect in certain names. We'll definitely talk about energy in a second, but I have been seeing that here in a lot of names that have been beaten down you know, over the last several months into the last year. But anyway, home builders here up 1.25% today. Still not the greatest pattern. We're into this trend line here. It's kind of a weird one. It kind of got violated there. Ended up being kind of a trap. Market's respecting it for the most part. We still have that head and shoulder top down to about 100. That hasn't been satisfied. I think this wants to retest that 200 first. And another thing we talked about too is these home builders, you know, they're tricky. They always seem to find a way to get out of trouble with lobbying and so on. But XHB is still kind of weak. We'll monitor it. Again, rates on the long end are up. VNQ has been soft as well. So commercial real estate and REITs, little, weak here, but they did get a very good bid on Friday, up 1.3% on VNQ. And I think this can rally back to 92, maybe 92.50 in the near term, but definitely a pretty good cut there. And still just kind of clinging to that weekly support. Another sector too, biotech, up each of the last 3 days, was up nicely yesterday. I just want to show this really quick. I'm kind of doing a little bit of a different format here, but look at the strength yesterday in the morning. And if we compare that just to the NDX, NASDAQ 100, look at the correlation, is very positive. Yesterday that broke off. So while the NASDAQ was selling yesterday, biotech was very strong. I believe a lot of this is January effect stuff. So keep an eye on these beaten down areas. They tend to rally in that January period. So XLF here, fractionally higher, still slightly down on the week. Same resistance, 49.30. KRE, kind of a flat week, but look at this nice liquidity grab. We've been watching this trend line for a while, and this is what we call a divergent low. Higher low on the RSI. You can see it nicely there on the 4-hour. Spike the low and then rally back up. So KRE still hanging in there. I still think this is good up to 63, 64. And KBE, give it 58 to 58.50. Broker dealers managing to hang in there another week and basically flat on the week. Should be able to take this high out shortly. It's not that far off. So weekly chart is fine, no damage. Monthly chart is the thing I don't like, as you guys know, it's parabolic. And parabolic trends do not correct sideways. So another risk there potentially, but these can go higher than you think. All right, let's get into it. So I know everybody's waiting. This article, actually just last week, on energy, and made the case for the bull market here. If you haven't checked that out, it's on my website, Carnivore Trades, under Market Insights. But one of the biggest things, I think I shared it in here last week, was dealers now net long energy, or excuse me, XLE, like stocks, not necessarily oil futures, but energy stocks, while hedge funds managed money is net short for the first time since, guess when? Nope, it's not the pandemic low. It's the low after. Oh, we got to go back. It's been 5 years already. Time flying, guys. Right here. And then XLE had a 300% gain in the last in 12 months after that. XLE, maybe some tax loss selling, up each of the last 3 days with the market down. Keep an eye on this. Oil, very strong start, actually strong end to the year, strong start as well. 75, 76 is resistance right now, but it's breaking out of this range. And we talked about this. Volatility is coming. So look at the Bollinger Bandwidth here on the weekly. This can only stay tight for so long. And the long end of the yield curve is telling us that there's problems. But oil acting well. 75, 76 is next. XOP, very nice rally in the end of the year. Gapped above the 20 MA and kept going. A little bit of resistance up here. But strong start. OIH, same thing. So you guys know my thoughts on energy here. And we may be starting to see this play out. Uranium also a strong start to the year. I thought CCJ would get down to 49, maybe 50, but nice bounce already. And when things are strong, sometimes they don't always get to those levels. URNM, huge move yesterday. Take a look at the NJ. So these small companies are moving. I think a lot of what happened here is there was some chasing going on. I talked about this a little bit back here. I think there was some chasing going on. I think positioning got a little crowded. And when they corrected, I think some funds maybe just said, forget it. They sold off and now they're rebuying. So it's clear to me that, I mean, it's not a coincidence. It's not a coincidence that this is rallying first day of the new year. There's a lot of money that can't go to work for tax reasons and so on and so forth. I think this has something to do with it, but nice move there in the uranium space. Nat gas, let's look at the G contract here. So big retrace here after that huge pop. Again, this contract goes back a couple of years. Look at that. The charts are great, right? Pivot low from 2023, went right to it. So a lot of longs trapped there. It's probably commercial long, so it's not that big a deal, but I mean, nat gas is nat gas, isn't it? Let's see if it can hold 325 for now. A lot of volatility on this right now. Be very careful trading it. Look at the dollar, guys. 109.50. So I've had this line on this chart here. Let me get rid of the fib. I've had this line on this chart for probably 2 years now. Here we are. hit it yesterday, so it was Thursday. Right there, and you can see that coincides with the 618 fib retrace from the high to the low. So dollar really strong here. I think it may back off a little bit, and I think part of the reason why we were able to rally today, at least from a macro sense, is because the dollar stabilized. The market doesn't need the dollar to go down or up in order to rally. I mean, just look at the dollar's been all over the place all year. The S&P went up all last year, right? But when it's going up fast, like this and like that, market doesn't like that. Same thing with yields, right? If it's okay for yields to go higher, but when they spike, right, like they did in 2022, market does not like that. Slow and steady. So I think the dollar stabilizing may have helped out markets, but we'll watch that 109, 109.50 area. If they can get through that, I think we have bigger problems, but we'll see. Emerging markets have the problems, I guess. Maybe they'll pour some more money into the NASDAQ. Anyway, let's get over to gold here. Very strong start to Jan. A little bit of a retrace today. You guys know I like this into quarter one. And I'm looking to pick some up for a swing too. I think we're going to 3K before, I'd say sooner rather than later, I guess. Late quarter one, early quarter two. It might need a little bit more consolidation here though. GDX, I want to cover this. Finished green for the week. Look at this trend line here. So nice reaction there. Again, good pop off of it. Little back off today, but that's fine. Good start to the year for gold, and even with gold down today, silver was up. I think a lot of that has to do with the dollar kind of slowing down and market stabilizing. Investors maybe say, okay, like I'm not as fearful now, don't need to buy gold, in such a panic, because silver, platinum, palladium, and copper are all green. So with gold down. So that's what I would take from that. However, I mean, it's, first 2 days of the year, there's a lot of money that gets moved around. So we won't make too much out of it. But silver, watch this falling wedge here. Still got some space, but it's setting up here. It has backed off of the highs, but big picture, really nothing wrong with this. This could be setting up another trend leg here soon. And then back over to platinum here. Man, what a trap fest. So we broke out of this falling wedge, sold off, and then that became so it was a bull trap to a bear trap. And now right back up, basically where it started. These thinner metals, platinum and palladium, they're tough to trade. You got to look at the bigger time frames to trade them because they can move fast. So when the futures market is thin, any one fund can come in and just move that tape really quickly. Palladium is still undamaged. I do like this pattern. I'd like to see it tighten up a little bit more. And then copper did exactly what I suspected it might do, which is sell through the 410 level and then not follow through. So again, maybe a liquidity grab here. We'll need to see if it breaks that trend line. We'll know for sure. It might squeeze, but if not, looking around 390 or so. Anyway, crypto here. This is another reason why I thought we would hold up in the markets. Again, Bitcoin green each of the last 4 days. ETH, look at Dogecoin. Polkadot was up big earlier. Litecoin, Cardano 14%. Pepe, and everybody's favorite, the greatest store of value when tech is selling off. Everybody knows you put all your money into Fartcoin, which is up like 50% week to date. At all-time highs. So I don't know if that's the new safe haven trade, but either way, crypto here. I mean, to me that shows that there's not liquidity coming out right now. But in any case, Bitcoin again testing that low end 91,000 area. We know the level, 100K to 91-ish. The one thing I'll say is a lot of the time when you're in a tight range like this, the first move is often fake. So if we spike that low, it might be a buy the dip. If we spike the high, it might come back in. I'll say though, I'm going to give the bulls the bias here because even if we spike the high, as long as we hold up, we can just consolidate through time just like we did before. Watch the 20 MA on the weekly. If it catches up to price, 50 MA catches up to price, I think it can still go higher, but it is still in backing and filling mode. ETH, I really quickly cover, had a really good day today, broke out of this range, and the monthly is still this is good. There's nothing wrong with this. So I like to look at crypto for a good gauge of risk on, risk off, and I don't see any problems here. Bottom line, SPX, I think I'm going to give my general lean here is that we should go up and test 6K, and that's going to be the moment of truth here. So if bears show up there, they can make a statement. If they let that go, we're going to make new highs. So that's what I'm looking at here. But we do have jobs next week, so it should be a lot of volatility, just like there was to start and end the year. But anyway, should be good. A lot of fun here already. And again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com, and I will see you guys all next week.